Hello and welcome to the 8th episode of Hiring Happenings with a Pestle Twist. We're in the second half of the year here in 2024, so we've gone global. And this month it's economics. There is so much going on in the world with regards to global economics. I'm really looking forward to this conversation. We've got two fantastic guests with us today. Adam Pode of SIA, the Staffing Industry Analysts, and also Donal O'Donoghue of Sanderson. So Adam, let's come to you first and foremost. Thank you for being a guest on our podcast here. What made you say yes to a podcast about global economics?
Well, first of all, thank you very much, Angela, for inviting me. I sell myself as a human Google. People come to me and I try to find them answers. It doesn't mean I know anything. It just means that I'm good at finding the answers. But I've found throughout my career that economics has played an enormous part. Understanding things like how labour markets move, what's happening with GDP, how inflation might affect both of those is enormously important. So I'd say I'm human Google with a side swiping of economist.
I love that. That's fantastic. And I must admit, you were recommended to me by John Norton when I approached him. He said, no, you know what? I know who's perfect for this. So thank you so much for saying yes. What about you, Donal? Why did you say yes?
Well, I think it comes down to context because, we're in the staffing business and operating a business with offices in Ireland, in the UK, in Hong Kong, in Singapore, and Australia, and we have a large centre in India as well. So we are a growth-focused business. We have, like many people in Ireland, UK, US, APAC, we've had a subdued trading year, to quote our chairman. And I think it's important to look at the context of when we've got challenging economic environments or, as Adam said, the impact of interest rates and inflation and other factors like GDP, GNP. We've got to be aware of the market that we're trading in, and we've got to find opportunities. So I'm sure we'll get into it in the conversation, but each market creates opportunities. So that's why focus on global economics is really important for us. So I'm not an economist, but I'm coming at it from a practitioner standpoint and really looking forward to the conversation with you both today.
And that's perfect, because that's what Hiring Happenings was set up to do. That pestle twist: political, economical, sociological, technological, legislative, environmental. It was about looking at that bigger picture and where are the opportunities. Maybe using the pestle with a good old SWOT. A lot of people know SWOT analysis, but when I speak to companies, pestle has got lost along the way. And for me, it was a great way of spotting opportunities, of being able to have interesting conversations with candidates and clients to really talk about what's coming up, what's happening, what do we need to be aware of. So let's get into the economics then. I did A-level economics. That's about as far as it went, to be honest. It wasn't my favourite subject, but it did give me a little bit of a grounding in this. But let's help all those other people that haven't necessarily got that, or maybe they have an interest in this. So Adam, I'm going to come to you first with the topic of first principles. So let's get into that.
Well, I was going to say the first principles I actually wanted to talk about is something that you've just really covered, and that's why look at pestle. What's the importance about it? As you've outlined, it's a tool for analysing and monitoring macroeconomic factors. And I was quite amused that you can now turn a pestle into a steeple if you add ethics as well. But the key thing is, turning it to an economic viewpoint, it's understanding those economic factors that may have an effect on the business, looking at what tools are available to warn you of what might be coming down the road, and looking at, Donald's already covered it to a degree, economic growth with GDP, inflation, labour costs, interest rates, exchange rates as well, increasingly important if you're operating an international business, globalization, the cost of living, which I've got a couple of interesting tools that may be of use. So it's all of those additional factors that you're having to look at to make sure, as you say, Angela, with the SWOT analysis, what could be impacting my business.
Yeah, and certainly as a recruiter, it gave me confidence knowing what was happening. So Donal, in your business, then there was a few points in there that obviously we're going to get into a deeper point. But as a global business, what impact does economics have on you?
Well, I think our business is a very straightforward supply and demand model. Demand in recruitment or staffing are job vacancies, and supply are candidates. And what we've seen over the past 12 months is a reduction in demand. There have been fewer vacancies on the market, and that is a result of what we're going to get into now. But organizations that are not delivering on their profitability targets or not delivering the required return to shareholders or stockholders, and we see it every earnings season that there will be, particularly from some of the US firms, rounds of restructuring and redundancy, and that is not good for recruitment businesses. So I think on a very basic level, it's that supply demand matrix that we're looking at. And when you look at the data and some of the points that we'll talk about, we've seen organizations struggle because of that reduction in demand. So then it's about really getting into cutting your cloth to measure to make sure that your business is the correct size for the amount of demand that you have, and that you maintain a profitable business in tougher trading environments.
Yeah, I mean, it's always cyclical, isn't it? It always goes round. I've been in this 35 years now, so we've just had our fourth recession here in the UK for the time that I've been here. But I must admit, I was shocked to see the stats coming out to the extent they were. The 20%, the 30%, sort of Hudson were 20%, Page 35%. Okay, we know it's been a tough year, so that makes sense. But you've got Manpower in Australia, admittedly, 45% drop in revenue. So that's a big chunk. But the main one, the Guardian article of Hayes releasing their most recent report, 92% drop in profits year on year. So the impact on that, now we all knew it was coming. We all knew it was an issue. We also knew that 2022 was such a great year that we weren't going to get that level again. But Adam, when companies are sort of up and down like that, what impact does that have?
Well, obviously it has a massive impact, but I think, I was talking about first principles, and you talked about cyclicality. And I think it's worth reminding ourselves that conventional wisdom says that if GDP is going up, and at the moment it is going up, and I can talk more about that if you want, and there's tight labour markets, then the staffing industry should be great. So I take slight, I'd argue slightly with your idea that what we're looking at is cyclical at the moment. A lot of people are wondering if there's a complete disconnect between GDP, for example, and and the results that you talked about. An awful lot of companies are doing much worse than they thought they were going to do. Things like in the United States overall, we've seen a 17% drop in revenue. So I think what we should do is get into what has actually caused that, and is the market always going to be doing worse than we thought it should be?
Let's hope not, but let's get into it then. So what does the data show us, Adam, with regards to this last year?
So GDP is actually not that bad. GDP now and going forward is predicted across the 10 major markets. And I say the 10 major markets because those 10 account for nearly 75% of global revenue for the staffing sector. GDP in all of those markets is going to be up now and for the next 5 years. And I'm sorry to give you loads of figures, but Australia up 2%, China up nearly 4%, France up 1% a year. All of these figures are. Germany, which has been really hurting, the metal industry, which is 70% of the marketplace. And by metal industry, I actually mean, banging out big bits of metal, mostly of which go to cars. Even Germany is predicted to grow by just under 1% for the next 5 years. India is doing massively well. Made in India has been incredibly successful, and India is going to be growing by 6%. And I could give you other figures, but let me just say that the UK is also growing by 1.4% for the next 5 years. So GDP-wise, things aren't too bad.
I'm so glad that we've talked to you today because they're putting that positive spin on it. We've felt this upturn. We've seen these green shoots in the last couple of months, but to actually hear it from people that've got all the data and the information, then that's really positive. And like you say, 10 countries out of the 195 to 200 that have 75% is quite phenomenal, isn't it? But that does mean there's lots of opportunity for all those other countries. Yes, you probably want to be in those 10. And I can see Donal making notes. He's like, right, where are we going next? Anything grab your fancy there, Donal?
Yeah, well, look, here's what I think. I think that's very encouraging because if there's growth, there's opportunity for recruitment firms and staffing firms. But the challenge that we've got now is that if you look at the results for the last 12 or 18 months, in many organizations, revenue is down, gross profit is down. And if you think about most organizations, about 50% of their GP number can be spent on payroll costs. So in a challenging market like that, you see organizations downsizing their teams. And if you downsize your team without uplifting your technology, you reduce your delivery capability. So the challenge is, if we've got 5 years sight that there's decent GDP prospects in our major markets, but we've reduced our delivery capability, the organizations that have cut too close to the bone are going to be the ones that will struggle to maximize on the uplift. So this is where it gets really interesting, particularly with public listed businesses that are under pressure to deliver shareholder results, maintain profitability. They can be aggressive when it comes to making cuts, and that can cost them on the upswing. So I'd be interested to hear your views on how you think that is going to shape out over the next 12 to 18 months.
Yeah, I was going to say, Angela, the GDP figures are good, but as Donal says, there's a bunch of reasons why the market isn't going where GDP points. Historically, there's been an incredibly close relationship between GDP growth and how the staffing markets do around the world. If you want to be really a statistics wonk, if that makes sense, I was trying to explain to my colleagues what an anorak meant, and I'm probably an anorak. But if you want to be an anorak, the regression analysis relationship between Germany and France is above 0.8%. That means that when GDP moves, temporary labour markets move. Although actually temporary labour moves first, and then GDP is normally a following indicator. But things do seem to have got completely out of alignment at the moment.
We seem to have had 3 or 4 years of it just not being the norm, things not playing out how we would normally expect them. So when people say, oh, this is going to happen or that's going to happen, I have to sit back now and say, I really don't think you can say that. Definitely, because the markets are changing and the way things are happening are making it very difficult for us to predict. And I know that's the industry that you're in, gathering all this information. But have you found it unusual these last couple of years in what you're saying there?
Oh, well, it's certainly been massively unusual, a massive disconnect. Obviously, when I'm looking to forecast, the first thing I do is find a chicken split it open and look at its entrails to see how things are actually doing. But as you talked about, big three, comments in Q2, revenue eased, we're remaining cautious, activity softened, clients are still very reluctant to make big investment decisions. It's not a pretty picture, and yet this is all coming after one of the biggest boom markets that we've ever seen. In the United States, healthcare alone as a market was worth more than every single other country's staffing total revenue. So go figure. Yeah, definitely an unusual market.
Well, after a sort of century event like the pandemic, in that sense, then it wasn't surprising that healthcare did so well. But to that extent, I mean, that is just phenomenal. Now, one other thing I want to throw in here, so Donal, I want your thoughts on this, is that we've also had sort of 10 years of people not having to work so hard for their revenue. In other words, business development was not a strength, as it were, that people were recruiting for. They were recruiting for sources. They were recruiting for people that could look after clients during that time and grow them, key account managers. So what we've spotted in this last couple of years is people really struggled to actually go out and find that new business. There are jobs out there. We know that from the figures. But the agencies are not being able to fill them. The in-house people are even struggling with their hiring managers. So this is our experience in talking to them, that skill of business development and building relationships with customers just hasn't been there for some reason. I'm wondering if it was the technology. What are your thoughts, Donal?
I think it goes back to the supply and demand agenda. So there was plenty of demand for a significant period of time, which left people in two modes: delivery, completing assignments, and relationship management. The challenge is that now that there's a need to be more front-footed and to do more business development, the old ways of developing business are no longer relevant. If you go back to how people who are senior managers or directors were trained 10, 15, 20 plus years ago, it was about identifying organizations that you wanted to work with, finding out who those key buyers were, picking up the phone, having meetings. Whereas, now there's more of a need to engage with social selling, with procurement departments through bids and tenders, and open book pricing, procure to pay, where you've got sophisticated buyers that are very familiar with the pricing index and how RPO, MSP, executive search, perm recruitment, temporary staffing, and it's a more nuanced and a more sophisticated way of doing business development. And I think the gap has emerged where there's a capability gap between the way senior managers worked when they were on the desk doing operations and the skills that are needed today. And then you add into that, to touch on Adam's point, the need for technology. So, for example, if we look at the challenges in any business, not just staffing businesses, it's about managing costs at the moment. When trading conditions are more subdued, we've got to make sure that we manage our costs well. We know now that with AI, we can improve productivity and efficiency, but there's an investment required. And getting boards, sign off investments when profitability is down in all of the large publicly listed businesses. So it's a bit, there's those opposing forces that are at work here. So it comes down to courage. Do organizations the courage and the belief in their teams to make investments and to position themselves to really grow in the improving market?
Yeah, there's this, like you say, that nuanced, I think, is the key word in there, isn't it? In the sense that things have changed so much just in 10 years that it did throw quite a few businesses, and certainly finding people that are the true 360, if we want to call it that, but can actually do everything, has been really hard. But that's then pushed to much higher labour costs. I mean, yes, in general, because of cost of living crisis pretty much globally, isn't it, everywhere? But the labour costs finally moving after being stagnant for so long. Adam, do you have any stats on labour costs?
I don't have any specific stats, but there's a lot of evidence that this is the one area that really worries me. Everybody, if you look at all of the results that you've been looking at, all of the companies are saying there's a disconnect. They're saying that things should be coming back to a new normal. All of the surveys I've seen seem to indicate that people are happier about 2025 compared to 2024. But the one factor that could completely mess this up is the cost of labour. Now, we haven't seen the levels of wage inflation that we were seeing in 2023. and bizarrely, we're actually keeping some companies' revenues higher than they would have been otherwise because the staff were costing more. You're looking at 8, 9, even 10% wage inflation. Those levels are coming down. But the actual cost of hiring or the actual cost of the workers is increasing, particularly where there's skill shortages. There have been historic skill shortages getting worse and worse. And if you're looking to fill jobs, you're probably looking to pay more, anecdotally. So that is going to have a bad effect on the market. And that's the one thing that could really mess things up, not just this year, but next year and the year after.
Yeah, we have been hearing that. Donal, are you in that situation?
Yeah, what I was going to say, Angela, is the other challenge we have is when you look at the measure of inflation, inflation is tracking the cost of goods and services, utilities, etc. What it's not tracking is asset inflation. So if you think about the people that are working in staff and organizations, and we talk about the last 10 years, house prices. So house prices in the UK in the last 10 years have gone up by 46.5%. House prices in Ireland have gone up by 116%. Australia are up 70%. The US in the last 10 years, house prices are up 60%. So wage inflation isn't keeping up with asset inflation. So it's creating more uncertainty for those people that are in that, I suppose, that earlier career stage where they're trying to get on property ladders. And that uncertainty is not good for staffing businesses as well in terms of keeping and retaining highly productive people.
Well, Angela, that also,
can I chime in there? I think Donald has touched on the most important factor of all. And in terms of economics, what we need to be looking at more than anything else is uncertainty. The more uncertainty that we have in the market, the worse things are likely to be. We're lucky in that there's a number of different indexes that we can see. We can actually measure the level of uncertainty. But more than anything else, I would say it's uncertainty that we need to measure just as much as forward GDP growth.
So how do you measure uncertainty then?
So I cheat. I go and use somebody else's figures, and there are about 6 or 7 different measures of uncertainty where people do something. One of the best is the World Uncertainty Index, where the academics who put that together from the IMF just go away and count the number of times uncertainty is mentioned in the Economist reports across the globe. The good news is uncertainty is down. So we were looking last year when Credit Suisse nearly went bust. We were looking at a huge jump of uncertainty. Now that follows the war in Ukraine, which also had a huge impact. And before that, obviously, COVID. Now, uncertainty is down by all of the measurements that we've seen. But that is one of the explanations why the market's been so bad. As Donald alluded to, the more uncertain people are, the less likely they are either to take on new workers or the workers themselves are less likely to move jobs because they think, okay, if I am where I am and I'm being gainfully employed, why do I want to move?
So I'm smiling here because I always felt that old adage. I'm an optimist, so it was always let's talk positively, because otherwise we'll talk ourselves into a recession or whatever the situation is. And you're actually now proving that is what's happening, because if they're measuring how many times people say uncertainty, we're talking ourselves into it in that sense. So let's talk ourselves out of it. Let's be positive. So just to clarify as well, GDP, gross domestic product, IMF, International Monetary Fund. We use a lot of three-letter abbreviations, TLAs, don't we? And just put those in there. So what we'll do is we'll get the links for those index as well, and put those into the information for people to go and have a look at those. Okay, so Donal?
Yeah, I was going to say, just on the positivity side of things, and this is anecdotal, so it'll be difficult for you to track this, Adam, but I can tell you from people that I have been speaking with that are running recruitment businesses across the UK and Ireland in particular, that in the recent months we've seen green shoots and we've seen an improvement in permanent hiring. And the reason I talk about permanent hiring is when I look at the last year that we've just gone through, what we've tended to see is that contractor recruitment was pretty flat, temporary recruitment was pretty flat, but because there's a steadiness in those non-permanent hiring types, what we really noticed was a decline in permanent hiring. And in many recruitment organizations, when there's a decline in permanent hiring, that really affects the bottom line. And I think the good news is that we are seeing increased permanent hiring at the mid to senior market level, and that has a very positive impact on profitability. It's too early to call, but definitely the indicators in the past 6 months, I would say, have been positive.
Yeah, the reports that I've seen for July, all a big uptick. So again, all very positive on that point.
So, Angela, if I can say why I'm optimistic, I mentioned uncertainty at the moment, and actually the levels of uncertainty have fallen massively in Q2. So there is some positivity there. In addition, I do a poll, very unscientific poll, every time I do a webinar at Staffing Industry Analyst. We did the poll in November, May, and I did one just yesterday. In November, we had 2% of people saying there was going to be a strong rebound in the market. In May, nobody felt that that was going to be the case, but the good news is that 3% of people think there's going to be a really strong rebound in the marketplace. And when I say the marketplace, it's the global marketplace. Limited growth numbers are coming down, but we still have 70% of our respondents saying that limited growth is likely in the rest of the year. Although 30% say that they see no growth or a decline, and 10% see that there's they don't know what's going on.
Well, at least they're honest. Yeah. with regards to that. So pretty much all positive then on that sense, and certainly a big change since May. And probably a good time for us to reference Monster and say thank you to our sponsors of Hiring Happening with a Pestle Twist. They've been putting people together with jobs for 30 years now. So thank you so much to them. Why is it so important for us to have a little bit of inflation, but not too much? Because I think this is a key factor that everyone really should have this knowledge. So, Adam, let's go to your views first.
Well, Angela, let's go back to first principles again. Inflation measures how much more expensive a set of goods or services has become over a certain period of time. That's the definition of it. You're in a job. You go to the supermarket and you're seeing the goods that you buy increase by 10, 20. We've seen even raises in some food stuffs to 30%. Donald's already alluded to the massive increase in the cost of housing. And obviously an awful lot of temporary staff may also be in temporary accommodation, and we've seen rate rises across the board there. So you're going to say to your boss, I need more money. That's why inflation is important. If you're suffering consumer price inflation, then you're going to be wanting to negotiate a bigger salary.
So why is it that sort of it's 2%, isn't it? Is the ideal? We don't want zero inflation, and I've never really quite understood that. If you could explain that for us.
So if you have no growth in an economy, or the prices aren't increasing at all, or even worse, what happened to Japan and trapped their economy for about 20 years, things were actually going backwards. That means that it's actually costing you even more to do business, and you're getting even less for it.
So from a business point of view, then it's a good thing, but maybe an individual, not so much.
2% is doable. I think all of us would agree that 2% wouldn't be too bad, but it's a bit like unemployment. You don't want 0% unemployment. The figure, as compared to 2% for inflation, the figure for unemployment is a minimum of 1.5. And actually looking at the figures across the board, 1.5, almost no economy has that anyway.
Yes, I mean, that's the thing. We do have unemployed people. We do still have lots of open job. It's a skills gap, isn't it? Those people that they're not matching up to be able to do those jobs. Donal, I'm hoping to bring you back in here.
I was having a conversation a couple of weeks ago with somebody who has been chief executive of a number of publicly listed UK and Ireland recruitment businesses over the last 35 years. And he made a really interesting point. So I think he said he started recruiting in 1989 or 1990. And he was talking about salaries that were paid to candidates and the recruitment fees that were charged at the time. And what's quite interesting, and there goes the camera again, and what's quite interesting is that when you look at how the cost of doing business has increased over the years, and in terms of wage costs, premises, job boards, advertising, etc. And the recruitment fees don't look so different over the last 3 decades in terms of productivity and what was considered good. I think he was talking about an average placement fee when he started of £7,000 or £8,000, and somebody doing well if they're making 2 permanent placements a month. It's not so different today, but the context and the costs of doing business, from your team, all of your operational costs and technology are very different.
Yeah, I mean, that was my period. That's when I started, and actually salaries were 7,000 to 8,000 then. So I don't know for the sector that I was in, but certainly on the temporary side, we didn't have holiday pay. We didn't have to pay that out. There was lots of extras over the years that got added in, and we were charging 34% on a margin. So 20% margins now, they've really cut down the profit levels that were there, and obviously there's lots of different reasons for that, but I can totally see the difference. And you're right, I was doing 2 placements a week, and I probably come across most people doing 2 placements a month now, so straight away you've only got 25% of the revenue that you were doing beforehand. So activity wise, standards, performance, I think is certainly lower than was expected then, but we were doing 12, 14-hour days. We were burning out. So it wasn't sustainable what we were doing. So it does make sense that it would be less. So let's come back to that globalization, the fact that this is global economics. This was something that really hit me. I started traveling to the Far East and sort of APAC, delivering there around 2015-16. And as soon as Brexit hit, our exchange rate, the pound, just dropped like a ton, didn't it? So everyone that I was working with, I was doing all my work abroad, they were suddenly getting everything so much cheaper. I got so much more business that way because they were like, actually, no, it's competitive now compared to what it was even just a month ago. So, Donal, as a global business, how do exchange rates impact what you do?
Well, it really depends how the business is set up, and where your where your profit centers are. For the most part, for businesses that are growing through M&A, they'll tend to be regionalized, so it doesn't have a huge impact. It comes down to when you look to repatriate profits. So, it's not having a huge impact for us at the moment, but that's probably due to the nature of how our business is set up.
So if someone's looking to go global with their business, can you just explain a little bit about the issues then with repatriating the profits?
Well, look, I suppose it comes down to strategy. So, many organizations look for organic growth, by opening additional offices or opening additional service lines or different divisions, etc. We made a strategic decision about 8 to 10 years ago to move. Oh, there goes the camera again. We made a strategic decision about 8 to 10 years ago to move into more of a mergers and acquisition growth strategy, build and buy, if you like. And actually, that's one of the points. I'm going to just lean over a little bit here. That's one of the points that I think is interesting in a market where there are challenges and where some businesses are perhaps struggling for cash flow. It does create opportunities for groups that have, a significant balance sheet, that are interested in entering new markets to grow through mergers and acquisitions. So I think that's some of the consolidation that we're going to see in the market over the next number of months. I know Adam mentioned the real strength in the healthcare market in North America. And there's certainly a lot of platform companies that are interested in acquiring and getting into that space. And also the technology market is very strong, APAC, USA. And so I think we're going to see more growth there.
It does seem to be doing well. Obviously, we did global politics last month. There's a lot going on over there. But Adam, what would you like to add with regards to those exchange rates?
Well, I was going to say, I don't know, have you ever come across the Big Mac index?
No, I'm hungry now.
Well, The Economist does a great index based on the cost of a Big Mac. So if you actually want to know, you get your exchange rate on how many dollars you'll get for how many pounds. But if you actually want to get a really good idea of what the value of the money you're getting is, have a look at how much a Big Mac will cost you in Saudi Arabia or America or Switzerland, and have a look at the Big Mac index from The Economist. I would say that interest rates, I'd say exchange rates are really important, but you'll also find quite a few markets where you can't get your money out. So it might be an exciting staffing industry, but you're going to have to work on the basis that your money for that particular market may be left in that country, and you make your profits in that country. So that's another issue to bear in mind.
Could you give us an example of maybe a large country that's the case?
Well, I was going to say the best example I can think of is Russia, but I think most sensible businesses have got out of there. But there's a number of markets in Africa that have similar problems.
So looking forwards then, global economics, I'm certainly feeling a lot more positive after this session, which is great. But also then those opportunities that we mentioned right back at the beginning, let's do a full circle and come back to those as to where we think the opportunities may be because of the market as it is. So Donal, let me come to you first. What would you say are key opportunities that people should be thinking about?
Well, I think when we're looking at a context where we're going to see GDP growth in the core markets, there's always opportunity for staffing and recruitment businesses. So it is as simple as ensuring that you've got the delivery capability in your core markets, and that you're looking to use something like an Ansoff Matrix to see how do you grow. So if Igor Ansoff was a Russian economist, as far as I remember. You probably correct me on this, Adam, back in the day, but he had a what they call the Ansoff Matrix, which looked at how businesses grew using things like product development, diversification, market development, etc. And it's as simple as that for me. If you're in a positive economic backdrop, and the indicators are we're going to have that, and there will be opportunities for growth. So what do businesses need to do? I think it's look to see how their cross-sell potential is managed. So depending on the service lines in an organization, are your clients using you for the maximum number of service lines? Are they using you for professional services recruitment, for healthcare, for technology? Are they using you for temp, for contractors, for permanent hiring? Making sure that you're really deeply embedded with your customers. And I think there's going to be opportunities for acquisitions. So for businesses that are looking to enter new markets through acquisitions, I think the tough trading year that we've been through has put pressure on some smaller businesses' balance sheets, and it kind of given them some cash flow issues. So there are organizations that have good brands, good teams, but that will benefit from joining a larger organization. So I think when you see some of that consolidation, that also reduces competition in a market, which is positive for the businesses that are left. So I think there's lots of opportunities. So it's just a question, there will be an upswing. It's just a question of when and how significant. I mean, the upswing that we had after the pandemic was a false upswing in many ways, because organizations were propped up by government supports, wage subsidy schemes, and then the pent-up demand, and then I suppose the tech sector kind of outperforming itself. So it kind of created a false economy, and that fed into what you've already touched on, Angela, in terms of recruiters just focusing on delivery and not having a fully rounded skill set. So yeah, there's lots there to think about, but I think it's going to be positive.
I wasn't expecting to head into Ansoff's Matrix on this, but I'm glad you brought that up, because I'm seeing that a lot with companies. They're not even cross-selling. So just those to relate to recruitment then. So existing product to existing clients obviously is your easiest opportunity, and to grow more and get more business within them. So what are you actually cross-selling? Are you bringing those teams together? I'm seeing temp and perm teams totally separate, not working together and actually utilizing each other's clients, which just seems madness. But then your existing product to new clients, so that BD out there, who's going out there, who's going to be getting new business for them. But then a new product, what else could you be doing? And we saw a lot of pivoting over the last few years, and that might be the right thing to do for you. And of course, that to your existing clients, and then to new product to new customers, toughest there is. So not the first place you're going to go. I want to give you the last word here, Adam, with regards to this. So what are your thoughts?
So I think you've really hit the nail with that one. One of the areas that we see as an enormous opportunity is the professionalization of staffing. Increasing number of firms are looking at consultancy and actually managing the whole process for firms. And obviously the margins in those areas are much higher. Adecco is probably the best example of this, with having bought a whole consultancy arm just last year. As technology gets more complex, quite often firms will say, actually, we want somebody else to run our labor technology. There's also the development of platform technology. Donal mentioned it earlier, and that is an enormous opportunity, I think, for people. Remote work too. As remote work and hybrid work becomes more and more common, that actually gives us a much bigger pool of potential labour. Are you filling a job in London from somebody in London, or could somebody in Indonesia or somebody in India or somebody in South Africa actually take that job? There's a lot of reasons to be optimistic, I think, in this current market.
Well, I think that's a great bit to finish on there. Let's be optimistic. We can see that the green shoots are there. Things are changing. There are lots of opportunities out there. So just take a moment, take a step back, look at the bigger picture. What can you take from this and put into practice? Thank you so much, Adam Poe from SIA and Donal O'Donoghue from Sanderson. Great discussion, lots to think about there. And people, we'll put your links into the YouTube and all the podcast places where you can find this, and people can connect with you and follow, because I know you share lots of great information around this. And if you haven't heard of SIA before, where have you been? Because amazing data that all about our industry to help you to understand what's going on. Thank you so much. We'll be back next month with global sociological matters, another big topic. Thanks, everyone. Bye-bye.